Greeting Algo Artisans, exciting week in markets. We're going to take a look at Bitcoin, Ethereum, USD, JPY, Euro, USD, SP500. So we're going to go across markets. We're going to jump into the charts right now. Quick reminder that nothing we say in any of our videos, work, or website is to be used or construed as investment advice. Please consult a licensed investment advisor before risking your money on the markets because you can lose your money. It's risky. Okay, so we're going to start on Bitcoin as I usually like to do, and this is the daily chart, and we're finding that Bitcoin might have made a bottom. Now, a lot of people thought that the post-halving pullback, the price action headed down after the halving. A lot of people thought that this move to the bottom was the capitulation. They thought this was it, 56,500, but it does appear very clearly there is a new bottom, and that's at about 53,000. And there are those who do feel that that is the bottom. Now, of course, time will tell, but I can see right now, based on algos and price action, there is a decent chance that this is at least a local bottom because price does have the ability to move up from here. Now, I'm going to remove a lot of the liquidity lines off this chart. These are lines that we have talked about before, areas where there is liquidity, because if we take a look at the Kingfisher, we'll see that a lot of liquidity has been wiped off the chart. So we can see around 61,700, just a tiny bit of liquidity left, and that is where there was a ton of liquidity. And it does appear that people took their short trades off the charts. People are no longer as bearish as they used to be. Now there are a little bit more liquidations than there used to be around the 51,800 to 52,000 level. So I'm going to throw a line up there at 51.8, and that seems to be the only significant amount of liquidation anywhere near price right now. And that is very far from price. I almost don't care about it, but I'm going to throw it up there just so we have it there for posterity. There are actually more liquidity concerns just due to prior price action. You can see that I do have some markings on the chart. If we go back, we can see there was a consolidation in that area. So price might go down there, but according to the price action and the algos, there's a good chance it won't. It's going to be a combination of this double bottom when we zoom in here on the daily chart, where these two wicks came down. You have this wick right here and right there, and those form what is technically a double bottom, which if there is a move up afterwards, there tends to be some bullish capabilities. Now, I was looking at a move up to 61,000 because there was liquidity up there. That liquidity is no longer there. It doesn't mean the price won't go there, but at this point, what we are seeing is a decently defined range starting to form. Now, depending on how price moves down, if it moves down, I might keep this range as it is. Technically, in this range, most people would want to go ahead and short, and it's not necessarily a bad idea for a low time frame trade to short where you see a lot of times where price gets knocked down. We have numerous wicks where price did get knocked down, and the level is going to be at about 58,450. We have one here, one there, one here, two a little bit higher, and a seventh right there. So the chances are the price will retrace downwards. However, if price does break out, we can take a look at some strategies as to where price might go from there. So I'm going to go ahead and take a look at that bullish possibility first. The most recent impulse is right about here, and if I were to overlay a Fibonacci extension tool over the top of that, we would get some targets to the upside based on Fibonacci. Now, one of those targets is just above where a lot of price action happened, a lot of pivot points right here in particular. So I would be a little bit concerned that even though this 272 fib extension, which is right here, is telling us about 61,000 is a good target, I might front run that a bit because there's a lot of price action below that and price might not make it that far. So how would I trade this? Well, I would wait for a breakout, which means I can have a relatively tight stop. Now, as you can see, as price breaks above this, I have a line drawn at 58,600, and that is probably where I would look for my area of interest, actually about 58.5. As price breaks above these other wicks, not counting this tweezer top right here, but as these other wicks right there, as it breaks above that, the possibility of it going all the way up to say roughly 59,000-ish increases, and there can be a relatively tight stop on lower time frames, given that the algos allow for this, and I would be looking at about a 2-to-1 trade. So this is a bit of a swing trade. This is the kind of trade that might take a day, 2, 3, something like that. But if there is a breakout, might have a little opportunity here. It's just going to be a little bit tricky because there's a lot of price action that might prevent price from going much farther than this. So I'd be real careful. As a matter of fact, these two wicks up here dictate that if I can get a relatively tight stop, we'd have a little bit of a day trade as well. Tricky time to trade. Sometimes it's better just to sit back and not do that kind of trading, especially if you don't have the time to manage that type of a trade. However, a lot of people are of the opinion that price is is ready to turn around. And I can tell you algorithmically on the weekly chart that there is evidence that that is the case. And when I say turn around, I'm referring to a bounce back up into this range that was built over the past several months. Price could break above 60,500 or into the 61,000 area and even start to make its way back up towards 72,000. That might happen, it might not happen, but according to the algos, this is quite possible. We'll draw this right here just to kind of illustrate how that might work. A lot of different ways this can play out, but that's kind of the general idea. Now, there is a bearish scenario where price does dive down to grab a little bit more liquidity. Now, what has been verified here is that a lot of the large players started to buy up when price went that low, like your BlackRocks of the world, your IBIT, those kind of, tickers, if you will, bought a lot of Bitcoin as price went down in this area. So basically, retail panicked, institutions bought that panic. Now price may head back up. It might have been that this whole thing was allowed to happen. You got stories about Mt. Gox, you got stories about all these silly things that I don't really think make any difference anyway. Germany's government and all this, these big stories. I think that just causes people to panic, and I don't think it really affects the price. A lot of those type of trades could easily happen over the counter and not have to hit exchanges. So even if those trades actually happen, it doesn't make a lot of sense for them to go to the exchanges because they could get a much better deal over the counter. Whatever the case is, price could be caused to wick down a little bit more, grab liquidity, maybe around 53,000, maybe around 51,000, or even go lower. There are some indications price might want to go down to 44,000. But if I were to simply say what I think is going to happen right now, I think we're going to see price move up and test this 61,000 area, and then whatever it does around that 61,000 area, whether it breaks up or whether it breaks down, is going to tell us a lot about what's going to happen next with the market. And as we approach the end of the summer, which we're about halfway through right now, I think we're going to see Bitcoin go ahead and reclaim its all-time highs at 74,000. It's possible. I don't worry about that trade level by level, so I'm not going to worry about it at this very moment. Let's move on to different market sector. USDJPY has been very exciting, and I did go over this with our private clients this morning. What might be a really good trade, and it might be a little early for me to take this trade. I haven't taken it yet, but the USDJPY has been very volatile. You get a strong climb up and then a very hard move back down. So it'll take maybe a few weeks to go up and then just a couple of days to go down. And this is just the way it works right now. Some people think that this is part of a currency war. Whatever it is, the behavior is pretty well established. And what I think I see here is price grabbing liquidity at this 157.41 yen area, and price could continue up to some targets. Now, this would be a beautiful trade. I'm not in this trade. I haven't gotten what I need rule-wise to do so. However, this would be a really, really great long to grab hold of because the risk to reward on this is insane. And price could really go up there. I mean, this is well within the realm of possibility. This is actually what's been going on. And unless Japan wants to sacrifice a lot of their assets to go ahead and protect the yen, then this is just going to continue. Remember, money is not wealth. Two different things. The Japanese might be ready to handle this kind of scenario. They might be ready for it, and they might be willing to actually profit off of it. We don't know. I don't talk to the Bank of Japan. I don't talk to any of their pension holders, but that might be possible. At any rate, the charts are going to tell us what's happening to some degree. There might be some surprises. Price might nuke down when you're not ready for it, but overall, these kind of multi-week runs where price just goes up and up and up and up for 3 or 4 weeks like that, they're easily predictable. Very easy to make money on those, and I have been scalping those very quietly. So that's USDJPY. Nice little trade right there. Little free alpha. Remember, none of this is investment advice. Do your own research, trade at your own risk. Now, the euro, I got into a long on this one. I'm not going to talk too much about that. That's for our private clients, but what I will say is that we do have some areas of interest, right? We have this big consolidation going back to earlier this year, back to March, right about the same time that Bitcoin's been consolidating. This is like a reverse version of Bitcoin, basically. And we are seeing a possible break to the upside on this right now, right? The algos like to break it to the upside for at least the short term, and this would be a pretty remarkable opportunity to be able to catch along up to some of these areas. And all these areas that you see on here, I have different ideas for all of these. I wouldn't take these too much for gospel, but I'm giving you some clues as to how I feel about what might happen to the euro versus the dollar, and I certainly wouldn't be holding on to this past $1.1142. This $1.11.42 is where I probably would go ahead and not be in any trades, and in fact, probably a little before that. So if you want to know more about those trades, those trade ideas, again, it's not for you to follow my trades, but you can see what I'm doing over at algofactory.tech. Let's take a look at Ethereum. I did have Ethereum on here, a theory for Ethereum. There was a double bottom, much like Bitcoin, and of course, Ethereum is going to follow Bitcoin. Most bull markets, if not all of them so far, after the halving, have had a time when Ethereum does outperform Bitcoin. I don't believe we're in that time just yet. Even if it doesn't happen, even if it merely follows Bitcoin, there is a nice little bit of a trade right here. Some of these liquidity areas might not be valid anymore. It's very likely not this lower one that I just erased because price grabbed it. However, However, topside, we might see a move up. So I would say Ethereum going up to roughly 3,400 is not outside the realm of possibility for the next week or two. If Bitcoin moves up past $61,000, Ethereum moving up to this level is very realistic. Of course, we're looking at a massive downtrend, and the way to break that downtrend would be to violate here, which is 3,500 or so. Price can go above 3,500 and come back down and create a low that is higher than 2,800 and break even higher. Then we're out of the downtrend, and that's an indication that we're at least going to be seeing price try to reclaim its highs around 4,000, its low highs. So an uptrend is not really here yet, not anywhere near here, but we do have some indication that that uptrend might start. A very brief look at Ethereum because there's not much to talk about because Bitcoin is essentially controlling the whole thing. The last chart we'll look at is the SP500. Now, I did call these moves. I actually called those out in the private group, as well as I think I even talked about these live for everybody to see. My first target was 56.50 or so. Understand that the incumbent, or the incumbents really, are going to want to see price go all the way up to about 6,000, I think. Maybe not specifically that price, but what they are going to want to see is number go up because we have an election, and it's a very important election. And as long as the market looks good, it's going to say that the people in charge have been doing a good job. Doesn't really mean that, but that's what people are going to read. So with that, we're looking at a massive opportunity for the SP500 to go up to 6,000. And at the current trajectory, it's realistic that that could happen partway through August, which is extremely soon. To see this go up more than 5% in that time, that's remarkable. Given where we are with the election and the market, it is actually realistic. The summertime tends to be quiet. There tends to be the sell in May and go away. But look what's happened since May. Nothing but up. May has been nothing but up. You look at May 1st and it has been just 45-degree angle straight up. So sell in May and go away is not what's happened this year in the equities market and with the indexes. So I don't expect that to change. Not until after the election, unless something breaks. That's just the nature of things. It is what it is. Take advantage of it. I'm not saying this is for you to do. I'm saying do your own research, but this is what I think will happen. It's just pretty much a line up to 60,000. And it'll probably happen, I mean, like I said, I think halfway through August is realistic. Could be sooner, could be later. It's actually slower than the trajectory we've seen. I am being a little conservative on that, but that's it. I hope this video was helpful. Please come over to algofactory.tech. We teach people how to build their own trading method, otherwise known as an algorithm. You don't have to know how to code, but if you do code, we can put you on the path to where you can build something that trades for you while you're not at the computer. If you just want to trade manually, which is what most people are doing, then that is, of course, something that we can help you do and help you have the capability to possibly extract money out of these markets on a regular basis. And while we do focus on crypto for a lot of these videos, I'm actually primarily a Forex trader, and you got to know that crypto doesn't go forever. It goes for about a year and a half, and then for a couple of years, there's not much going on in crypto. And if you want to be a trader, you're going to want to understand how to really trade, how to put on those big boy pants, because what's going to happen is eventually crypto's going to flatten out, and the meme coins aren't going to be what they used to be, most likely. I've seen it enough times and been in this game since 2017. I don't expect that to change. So come on over, learn how to trade. As a matter of fact, we got some pretty happy customers who are already down the path of success in their algo building. Let's hear from one of those right now.
This is ThinkFree's Algo Factory testimonial. I began my prescription for Algo Factory the summer of 2023. I am now 70 years old, and I have set a goal to have a supplementary income by learning to trade. I have been putting in about 3 to 4 hours per week of study time. In spite of this small time of commitment, I am determined to learn to trade. I set a goal of slow, steady progress in my learning. It is now March of 2024, and I have been delighted that through the articulate speech and hands-on help and support from Cowboy, I have developed an algo that looks very promising. I've come to appreciate Cowboy's remarkable ability to communicate and teach. He's not just knowledgeable, but also very creative in his shoot-from-the-hips approach. I wonder, is that where the name Cowboy came from? I have followed the Algo Cowboy and V the Guerrilla Economist for more than 3 years and have found them to be very respectful, caring, and firmly rooted in reality. By that I mean they have a clear, deep, no-nonsense understanding of the world we live in, not just in trading and economics, but geopolitically and, dare I say, spiritually as well. For me, this fact makes working with them all the more gratifying and secure. This has and continues to be a great investment of my time and money. Also ends up being fun with the humor that is shared amongst our Algo Factory group members. Thank you, Cowboy.
Don't forget, algofactory.tech. Trade your job, upgrade your life. We'll see you on the next one.